For the avoidance of doubt, the simple side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, everybody, welcome back to another Saturday Sendout from the simple side. I've got a bunch of good stuff for you this week. We're going to cover everything that happened this past week in the markets. Then we're going to talk about the interesting trades that I have coming up for this next week and all of my portfolio performance. Let's get into it.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
All right, everybody, this is going to be a quick podcast for this weekend. We're going to run through some market commentary real quick, and I'm going to leave it up to all of you to go through and look at the insider trade updates, all of the interesting trade ideas in Berkshire buys, and then, of course, the portfolio performance and all of that good stuff. As you probably saw in the newsletter subject line, or if you didn't see this, if you're reading it just on the Substack website, this week our tech growth portfolio had 0.53% returns, our flagship fund had 0.83% returns, and our AI bets portfolio had 1.31% returns. All right, without any further ado, let's jump into this past week's market commentary. Of course, after a choppy Tuesday, we saw stocks firm up into the weekend, with the S&P 500 up with week-to-date highs on Friday. The Nasdaq was up, the Dow was down, small and mid caps finally joined the party, and we ended with the Russell 2000 up 1%, S&P Mid Caps up 1.3%, and the VIX spiked midweek, of course, following all those choppy days, and then faded at the end of the week when we saw things start to return to some profitability. We saw employment payrolls come out this week. Well, unemployment payrolls come out this week. And we are keeping the one and done rate cut narrative intact as of right now. Markets are effectively pricing in a quarter point trim in September because the Fed likes easing when the job market cools without breaking. Communication services were the folks running this week, especially with Google or Alphabet, whatever you want to call it, won on their lawsuit with Chrome and search results. We saw them up 5.1% week to date. We saw energy sag down 3.5% week to date, which is surprising because our AI secondhand effects portfolio ended up higher on the week, kind of neglecting the trend we've seen in the rest of the energy market. No surprise here, we saw financials lag down 1.7%. Of course, we expected this as lower yields mean that these companies are going to be earning less money and charging people less money for all of their interest rates. And so we're kind of assuming that they're going to be dropping here as rate cuts continue to happen. In the AI chips and cloud world, we saw Broadcom post record results, a 63% year-over-year jump in AI semi-sales, a $10 billion AI infra order from a new customer, and a fat backlog. Evidence that networks and custom silicon are the picks and shovels of this cycle. Now, you'll remember that my picks and shovels, for those of you that don't know, picks and shovels are referring to the California gold rush when everybody was running out to California digging for gold, but the people that truly became rich were the folks that were selling them their picks and their shovels. For us, we think that is going to be a lot of energy and AI infrastructure, what is what our AI secondhand effects portfolio is focused around. And if you want to go copy trade that portfolio, you can do so by finding one of the copy trading links in the portfolio. If you scroll all the way down in the newsletter to our paywall, if you're a free subscriber, you'll find the links there. Paid subscribers, of course, you'll find these links all over the place. So just look around in today's newsletter and you will find one of those links. Continuing with Broadcom, we saw OpenAI team up with them to make some in-house chips. And we're going to see a lot more coming out of them in that area. A bunch of good news with other AI chip and cloud people. Credo, which makes active electrical cables, is performing incredibly well. Ciena, which is optical cables, also popped on strong prints tied to bandwidth-hungry AI clusters. And again, we saw Texas Instruments remind everybody that autos and industrial are still digesting inventory. Amazon continues to stack chips and real estate, ramping up with Tyranium and Anthropic while keeping 100% renewables powered in their New Zealand Amazon Web Services region. A lot of interesting stuff happening there, but they are getting cloud compute to their customers in an incredible way. In the world of deals, we actually saw a lot of movement. Kraft Heinz, for example, is going to be splitting into two. tax-free public companies to simplify the story and capital allocation. Elliott took a $4 billion swing at PepsiCo to nudge that do more faster, and we're going to see probably a lot of action happening with Pepsi in the coming months, years. It's going to be interesting to see what happens there. Elliott, of course, is an activist investor who's kind of big on making change happen in companies. Whether that change is going to be good or bad is yet to be seen. Air Lease agreed to a $65 per share take private backed by Sumitomo. I don't even know what that is. But going private at $65 a share is going to be great for any investor who had been holding Air Lease up until that point. Of course, there's a bunch of news from companies like Lyft, who raised $450 million in convertible bonds. Bill drew Starboard in at 8%, and T. Rowe Price rallied on Goldman's planned $1 billion stake, showing that there is still a ton of free money out in the market willing to make big deals happen. A lot of things were backed up from Lina Khan's reign and deal-stopping power while she was in office. In the world of autos, EVs, and autonomy, we saw Tesla's India debut reportedly log 600 orders so far. They're in limited cities and premium pricing, of course, while BYD's price war is squeezing Q2 profits even as revenues rise. NIO guided stronger Q3 deliveries, but is burning cash, and competition in the auto market is doing what competition does. And the auto market already has a rough time with making a profit on what they're selling. So this is going to be very interesting to see how all of this pans out. Waymo won the green light to operate in San Jose's airport, and we're going to be seeing a lot more of Waymo in the coming months. Google, of course, is ripping right now, and they've got a ton of companies built into a mega holding company, as I like to think of it as, and they are going to be continuing to climb. They're doing incredibly well. In the world of energy, Exxon's Guana machine continues scaling. We see Total Energies grabbing Nigerian offshore exploration licenses. Uranium Energy, which is a stock in our AI secondhand effects portfolio, stood up a unit to explore U.S. refining and conversion, and they have a lot of vertical integration, which is meeting some energy security problems, but they're doing just fine. Kraken Robotics booked $13 million of sonar and battery orders, and Dorchester Minerals added Colorado acreage. Going to be a lot of interesting stuff happening in the energy world for the next 5 to 10 years as we see AI data centers ramp up and continue to grow. Now, if you're worried that AI is going to be taking your job, I really hope that you are not a support agent for a company, because Salesforce just said that 4,000 support roles are now being handled by AI agents. And this is not the only company that is saying, coming out with news like this. DocuSign, Samsara, Guidewire, Braze, UiPath are all saying that AI-assisted pipelines are big for their companies and that they are cutting costs in doing so, which is something that we predicted a while ago. We don't think that a lot of these AI tools are going to be used for revenue driving. Instead, they'll be used for cost cutting, especially with things like support agents. All right, so that's a lot of words. What is the bottom line? The bottom line is that the market absorbed tariff curveballs. They absorbed softer labor data and a semiconductor wobble and still finish with better breath at all-time record highs still in sight. Rate cut hopes are doing some of the lifting here, but the sturdier tell was where the money flowed. Networks, storage, optical, cloud, everything that makes AI usable, which again is exactly what our AI secondhand effects portfolio is invested in. I think we're going to see a lot of gains in that portfolio in the coming weeks and months. Overall, there are still legs underneath the rally. How long this is going to last for, nobody knows, but that is why we have 50% of our portfolio sitting in cash, and we expect that cash position to rise in the next coming months and years. All right, this is where I'm going to leave you guys today. Of course, there's insider buying news that are coming up right after this in the newsletter. I have our interesting trade ideas and our Berkshire buys updates down below that as well. Of course, if you're a premium subscriber, you have access to all of this on our Google Sheet or by going through anywhere in the newsletter. Of course, you can find all of these old articles there. If you're looking for our portfolio performance, our AI secondhand effects portfolio is up 9.45% since we put it on autopilot. Our tech-focused growth portfolio is up 7.51% since we put it on autopilot, and our flagship fund is up 4.30% since we put it on autopilot. So if you're looking to copy trade those portfolios, again, just find one of those copy trading links in the newsletter If you're a free subscriber, scroll all the way down to the paywall is where you'll find those links. Paying subscribers, you know where to find those. They're all over in the newsletter and in that Google Sheet that you have. And I will be seeing you all next week.